it's Michael Saul. It is 6:11 p.m. on Tuesday, July 19th, and this is the stock market trading watch list for Wednesday, July 20th, 2011. Let's take a look at some of the stocks we were watching yesterday. Netflix started to come out of the pullback, but you see it gapped up above the previous day's high. So unless you used an intraday strategy to get in, volume was really light. So this one, I don't know about this one here. I don't know if this one's going to stick here. But they have earnings coming up this week, I believe. Wynn had the gap up and reversal. So we weren't in this one anyway, per the video rules. The video was not in this, but you can see big reversal candle after the attempt at the push higher. Let's look at MLI. Okay, we were talking about this one, had some follow through the downside, made up for this little nick on the upside. So then you see on Tuesday, traded higher. So, but you can see on this one here, if this profits weren't taken there, trailing stop would have been kicked out on Tuesday. JVA started to get a bounce here, but just formed a doji on the session. Once again, gapped up. I'd avoid this one for now. There's not a clear pattern here, in my opinion. Crocs started to break. Okay, broke out of this small pattern here, the small consolidation here. So I would have stops just back inside the consolidation here. Not up that much. This line comes in at about 26.80, and you can see it close. It went to about 36 cents from the open. So from the high, which was the trigger on this consolidation here. So watch this one. I'd be real tight with stops. HFC. Okay, HFC had a nice break. It opened just about at the pattern. All right, so you could see, if you didn't take this one, that's fine. And once again, you want to be careful on these gaps, because sometimes they can gap and crap. And if you used Monday's high as the entry, then there was no entry. Okay, this one wound up being a nice one, though. So let's see how high it can go. Maybe it can retest these highs up here. CMG. All right, CMG closed higher, but got rocked after hours. Now it looks like only a 320, but it was in like the 3 teens. Once again, this one gapped up outside of the range. Right, you can see the high was 329.80. The open was 330.48. So if you're not taking the other ones, you're not taking this one either. So it looks like Crocs is the only one that had the legitimate entry. The rest of them were gapping up above the entries, which, I mean, it's not. It doesn't happen all the time here, but. Here, meaning in the stock market. I didn't mean here in my house. But you could see that kind of weird kind of deal with the gap up after the down day on Monday. Even though we did get the bounce Monday into the close, we just had a gap up on Tuesday and did not look back, just pulled back and paused. And for those of you who follow me on my blog or anything, you know that I wound up fighting that trend. But in the end, it wasn't that bad. Like I said on my blog, still here to go another day here. So let's see. Okay, so we're gonna look at some of the usual suspects. Apple, the first one to look at. Okay, just complete monster melt up here, and then big move over 400. I think it was as high as 405, or in the 405s. I was watching it, but I didn't write it down. Now you can see it's back under 400. So will this provide a gap fade opportunity? It could, but I'm not looking to just see, it's gapping up, let's grab it short. I would be watching for a pattern to develop, and if you don't like to take the stock itself, there's other alternatives such as option strategies to limit risk, but I would wait for a pattern to set up on the intraday chart and then look to lean against that. I would not just be looking at a big gap up as an opportunity to just jump on board. Okay, so that's Apple. Let's look at Google. All right, Google trying to move higher here. I would bracket this little 3-day pattern here, and I would see, is it going to rip out of it to the upside, or can it actually pull in a little bit? And if it did pull in, I'd be looking for a retest of this 200-day moving average. All right, if it did start to pull in. Goldman. All right, Goldman, another new low on the open, and then it reversed. So this one got the target plus the bonus. Let's see what it does from here. Research in motion, still just inching its way down. I'm sorry, I don't mean to laugh. I hope nobody owns RIM and they're getting pounded and I'm laughing at them. I wouldn't want anybody to laugh at me, although I'm sure somebody did with my wonderful blog post of how I had the crappy day. But anyway, watch this low here. I mean, I just laugh because it just cannot get out of its own way. It's so horrendous here. Let me go back to RIM real quick. If it does wind up getting a bounce, I'd be watching this level that it broke down from as potential resistance. Caterpillar. All right, Caterpillar. Broke down on Monday, but closed back inside the triangle, then tried to break up. Closed just outside the triangle, but not with a big move. John Deere. Not doing much. Here's Amazon. Okay, boom. Looks like Amazon could be headed for that 2.25 mark. GLD. All right, started to pull in here. See, it broke Monday's lows, waiting for a signal on the test. Remember we talked about that? There was no reversal candle there. So you could see it did break Monday's lows. Started to trade lower here. Let's see, first target on the downside is just about here at 153.61, and then you got the moving averages below. SLV, all right, little narrow range candle. This one's starting to pull in too. Watch these moving averages. And one to watch for Tuesday, EVEP. And this one stings even more for me because this was on the watch list a couple weeks back, and it never triggered, so there was no harm, no foul. That's not why it stung. But this type of pattern was the exact pattern that I was looking at in my trading on Monday, and I wound up anticipating it instead of waiting for the break. So this stings me even a little more, that this line was still on this chart as I pulled it up, and it came up in my scans. But anyway, that's fine. I'm okay with the pain. Sometimes, you know, you really, when you screw up, you have to really face it. You have to look it straight in the face so you don't do it again. You don't have to sit here and go, you know, make excuses like, oh, I'm distracted, or, you know, oh, I'm sick, or a loved one is having trouble, oh, I'm moving, and just make excuses for why you just get cracked, right? Face it. What did you do wrong? I know what I did wrong. I broke rules, okay? Don't do it again. And accept the pain and feel the pain so you're reminded not to do this again, so you don't have to look stupid. And nothing wrong with losing, but there is something wrong with losing because you break your rules. All right, EVEP, spinning top. Sorry about that mini soapbox discussion there. So you got the spinning top here. All right, so the high up here at 66.17, and then look for a break of the low for a pullback. This is indecision. So this one may be looking after the new high up here. I don't know why it's a SPY here. But after the new high up here to maybe take a pause here. All right, it's had a nice run above the 10-day moving average. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15 straight days. No closes below the 10-day. So just keep your eye on this one. EVEP. And please make sure you're always checking the calendars for earnings and split stuff, and if there's any conferences coming up, etc. Okay? I will talk to everybody again Wednesday. I'll talk to everybody again for Thursday. Have a great trading day on Wednesday.